Okay. And now what we want to do is, instead of you all seeing my delightful mugshot, we will share the screen. Valmar, nice to see you. Okay, I am going to share my screen, and okay, so, and let's try to set this up. What's picture in picture? Do I want to have a picture? Allow this time, whatever. Okay, so excuse me while I'm just getting to grips with this tech. And right, so if I will log out. So can everyone see this screen with a login? I assume everyone will say yes. Great, thank you. So basically this is the email address and password. Everyone knows this except for Matthew, and I'll help you out at the end. Okay, so this comes to, by default, my user dashboard. Okay, I have a couple of portfolios here that are being displayed, and a test portfolio. What I'm going to do for this presentation, I'm going to present you three key aspects of the function of the application, which will be the screens, watch lists, and portfolios. There's going to be a reason for doing it in that order, as will become apparent during the process. Once we get into the portfolios, I will then go into some detail of creating portfolios, some of the features with importing transactions, and then the different views to try to explain. Interruptions and questions, by all means, raise a hand. Hopefully I will spot it in the little Google panel on the side and be able to hold what I'm doing and take the questions. Okay, so I will cover very quickly the UI. We've changed it so that the three key areas of the menu at the top are screens, watch lists, and portfolios. On the left-hand side, we have a DFT dashboard and a My Dashboard. My Dashboard is just this page here that you can see, which has my portfolios, portfolio groups, watch lists, screens. Okay. The DFT dashboard is exactly the same, except with the DFT portfolios, watch lists, and screens. We also have this new tour guides, which the idea of which is just to be a simple high-level guide for each of the different elements. And then we have a button for viewing all the DFT research that we have written on Seeking Alpha. Do I have, yep, I will admit a whole load more people. Welcome the other people who've just joined us. And how do I go back to my tab? Okay, so we're back viewing the tab. Right, if I create a new screen, we have two key areas on this. We have a screen configuration section here, and then we have the results. by default, you have a ticker, the company name, and a last price, and whether or not you have personally voted for this ticker to be analyzed by Sam. If I do the configuration part, what I will do is configure a screen which shows off some of the more recent additions, but is potentially valid green. So first of all, I'm going to choose the currency. Now we have this bar here, which allows us to search for items. One moment, I will just add some other people who have joined. What's going on here? And waiting to be admitted, admit all. Right, okay. So we are 24 people so far. Right, so just by hitting the space bar, it will give me a complete list or a partial list of the items. You can search for the items by typing text. So if I want currency, well, okay. If I want currency, yeah, I like it when it happens. Why? Right. Okay. So by default, when you add an item to the criteria, it will be display only. As soon as it's added here, you'll see the results in the table below. I'm not yet filtering anything, which is why we have a massive 13,000 companies being displayed, or rather tickers being displayed. If I unclick display, I can then select the criteria that I want within the currency, and I will select USD. I press the save button, it will update and say, oh, okay, there's 8,500 tickers in our database, which are USD currency. There must be a simple way of admitting people as they come without me having to. This is right, and okay, right. I will add, for example, a dividend yield. Not that one. Dividend yield. Again, it comes up display only. I'm going to look for stocks with a dividend yield between 5 and 15%. When I hit the save button, it will apply that to the filter. The number of companies that are found, which are displayed here, are the number of companies which match just this one criteria item. Okay, so of the two criteria combined, there's 1,004. I will quickly add some dividend growth that we want. We'll say at least 2%. Revenue growth, again, we'll say 2%. And net income growth, 2%. That's well done. I'm just deleting things because I'm clicking too fast, right? So we'll slow down. Revenue growth. Back 2%. Save. And net income growth. And 2%. Okay. And let's just add people, admit, and go back. Right. Okay. Now, I will add, for example, payout ratio. Earnings to dividend payout ratio. I will just have it a display item. And then one of the recent things that has been added as a criteria is the payment date months. And if I'm right, the memory is still working. That was Gordon who suggested that.
Yes, thank you.
Great idea. It's something that I thought of. Hey, that would be really cool and handy to do, but was just somehow too lazy and it required a prompt from you. Thank you for pushing me on that as well. Okay, so for that payment months, I can just display all of them, or I can say, well, actually, I want to fill a couple of holes. And let's say we just want to fill the first 3 months of the year. Okay, once I have all my criteria, if I just click on the top of the configuration panel, it will then reduce the size of it and you'll be able to see more of the table. So that's how we build the criteria. In this particular one that we have 16 stocks which have been found. Okay, from here I can export this data in multiple formats, XLS, XLSX, or as a comma delimited file. What else can I do on this table? I can sort the columns. And as soon as I have 100 or less stocks, why 100? It's just a arbitrary amount that I set. I can add all of those stocks to a watch list. Okay, if I click on that, I can enter a name and it will create and add those stocks to the watch list. Once that watch list has been created, it will then appear here, and here it is. It's the new screen watch list. If I go into it, yeah, you'll see that the watch list has been created with those stocks, 16 stocks, okay, as well as the columns that were configured in the screen. Okay, and at this point, you're also able to, using the similar configuration, add other columns to it. Okay, let's just go back to that screen. What else can I do here? I can copy this screen. Yeah, I've got this screen I want to use as a basis, and let me just modify one particular or several particular criteria and have different versions of the screen. I can delete the screen and I can even say, hey, I have a suggestion. Okay, enter the suggestion and it will get emailed to us, and I promise not to ignore it for 12 months. Does anyone have any questions about what I've shown with the screens? Going once, going twice, no comments. Okay.
I'm sorry, Robert, I did have a question. This is Gordon.
Hi.
Is there in the screen configuration, is there a drop-down box that just shows the buy list?
That shows the pardon?
It just shows the stocks that are currently on the buy list.
But currently on the buy list. Yeah, not directly. What you would have to do is select the percent above buy price, okay, and configure it to have a low value of 0. That means it would be stocks which are a negative percentage above the buy price. Okay, so in this case, none of those stocks. So let's that should do it. Okay, so these stocks percent above the buy price. No, I've got that wrong, haven't I? It should be maximum of 0. Okay, so all these stocks, their price is below the buy price, which means they're on the buy list. Okay. Ray has a question. Gordon, does that answer your question?
I believe so. I'm working on I'm working on the screen on my other display, so I think I got it. Thank you.
Great. It's a bit contrived, but it's the most accurate way of doing it.
Can you demonstrate that again?
Well, before you demonstrate that, I'm
Certainly.
curious, under your screens where you have DFT screens, you have a DFT buy list. Why is that? I mean, it looks like you've already automated that under your DFT screens. Is that not true?
Good question, Ray. We have already automated it, but if you have a screen which is the DFT buy list, maybe there's some other criteria that you want. Yeah, to say, oh, okay, I want high yielding stocks. So you could add that criteria to that screen. Yeah, whereas the watch list is just the list. Yeah, with no possibility to do that filtering. Okay. And a lady, I missed your name, wanted me to do that again for the buy price. Yeah.
Yeah, it's Luann. Thanks, Father.
Yeah. There is in the screens menu a DFT screens where I've created a number of screens, one which has all the DFT stocks, buy list, watch list, sell list. Okay. And so the buy list one is already configured to show those stocks who have a negative percent above the buy price, so that they are on the buy list. So you can have a look at that one and duplicate it if you want to create it yourself or modify it yourself. But I'll just show Luann how we create that again. So if I find the percent above the buy price is the one I want. Okay, and now I want to configure that. So I'll untick the display and I will say that its high value must be 0. So all the values that will be displayed will be negative. Okay, and there are currently 37 stocks on the buy list. Okay, now this number can be different to the number here. Okay, for the very simple reason that at various times during the day, the stock prices will be updated with the current market price. And so if there are stocks which are borderline buy and hold based on their price, then there can be differences. So this screen configuration is, if you like, closer to real time. Okay, does that help, Luann?
Yes, thank you.
My pleasure. Okay. Anybody else have any questions about configuring the screen. A naming thing. It may sound silly. For me, I'm screening stocks. Britain and America are two countries separated by the same language. Do Americans prefer filtering or screens? Or is it make no difference?
No difference to me.
Okay. Great. Some of the things that plan to do to improve the interface of all this is to allow for reordering columns. Right now, columns are displayed in the order in which the criteria are added to the screen. And so it's a case of currently having to think in advance, plan in advance. These are the criteria I want. What order do I want to have them? So one of the enhancements we've planned to do is to be able to reorder them. Another one is to, if I come back to what's the other one? The other thing that I wanted to be able to do is to, when I add an item to the criteria, the order in which it appears is it seems a little bit random. And there again, I need to tidy up how it's added. Also, the display only items, they don't need to take so much place. These are all screen candy, if you like, and not necessarily massive feature enhancements. Okay, so moving on, if we're happy with the screens, I will move into the watch list. Okay. Creating a new watch list is perhaps the easiest way of doing it. It's quite simple. Create new from the menu. I have a similar selection method, configuration method for the different columns I want to have. And up here, I can add tickers. So I want to add Mo, Altria, CMI, Cummins, and Arbor. So I type those tickers in, hit the add button. Okay. Okay. I want to see the dividend yield. I want to see the CAGR. Okay. And the columns get added. Okay. It's fairly simple and straightforward to my mind. It has a similar feel and approach as the screens. Any questions about this? Valmar, tell me.
Sorry, I was answering Sam's question about the macro overview.
Okay, sorry. So that's it for the watch lists. From here, it's also possible to say, okay, I have this watch list of items. I want to perhaps simulate a portfolio of these. Okay, so we have a add to portfolio button where, okay, I can select the tickers I want. I can say that I want to add it to a new portfolio, give it a currency, and also say, yep, I want to imagine investing $5,000 in each of them. Okay. It creates the portfolio, and I now have it here. Okay. The differences that are being recorded are based on the fact that it's using yesterday's close or the most recent close, and there are differences in prices already based on market changes today. Okay. Let's have a look at portfolios in detail. If no one else has any further questions or queries about watch lists. Okay. This is the new, it's been out a month or so, a few months, overview page. Does anyone have any particular questions about this? I know Valmar, if I remember correctly, in the queried about the internal rate of return and its validity of annualizing it if the portfolio has been going for less than a year. That has now been changed. Okay. Sorry, I didn't get back to you to let you know. The thing to note about the daily change here, it's based on the performance. Okay, so it will have a look at the performance graph that it has and have a look at the change in the over today or over the last two entries. Okay, so in this case, the 17th of December and the 16th of December are the 2 days that it's using. Okay, just because this hasn't been updated since 11:25 this morning, so before market open. 11:25, that's 11:25 Central European time, so almost 5 hours ago. So if I refresh that, okay, performance updates here, okay, we've now got 18th and 17th here, and you'll see that this is the daily change that's being recorded so far. Okay, it's a little bit cat-handed, and I need to think of a cleaner way of doing it. This performance information is now stored in the browser, and it's refreshed if it's more than 12 hours old. Okay, the application will automatically refresh it unless you refresh it here. So that's why there can be a slight décalage. What's a décalage in English? Difference, delay. Okay. The idea of the overview page is just that, to give you an overview, a summary of the portfolio. And from each of these sections, clicking on the title will take you to that particular subview within the portfolio. Now, I had planned to show quickly how to create a portfolio and importing transactions. Okay, because there is a technique which I'm not sure people will be aware of, that will take all of just a couple of minutes to show. So unless anyone's violently opposed to that, then okay, all right. So if I create a new portfolio, test for demo, okay. Now this is our new portfolio import configuration. I can select a CSV file, and here, for example, is a set of CSV files that I've created. I have 3 files, one which has Q3 transactions, one Q4 transactions, and one that has both. So if I select the Q3 ones, okay, this is a little bit contrived, but you'll hopefully see the reasoning behind it. I select it, the application will read through the file, trying to find a header column. It's found a header column, okay, but it doesn't know what date format is. Okay, in this particular case there, month, day, year. Once that's done, I hit the read transactions, okay, and bang, it reads these transactions. It will validate the date for the ticker. Any errors will get reported here. So I've got 9 transactions found, and I hit the save button. Okay, these 9 transactions have been read in. If I now go back into the transactions, fast forward a quarter or fast forward a month, or however you want to import your transactions, and I can upload more transactions. It's a similar procedure. Okay. Now, if I select my Q3 and Q4 transaction file, configure the date, read those transactions, and we'll see that the first, or rather the last 9 transactions have already been imported. It's detected that, and that it won't import them again as duplicates. Okay, and it will only import the ones which are the difference. Okay, hit save, and it will add those transactions to the portfolio. Okay, so that's a way of either you have separate CSV files that you can import, or you can just accumulate CSV files. Have one CSV file with an accumulation of the transactions as an alternative to manually entering the transactions here. Okay. From this view in the transactions, I can export. If I export to CSV, it will export it in the standard format that we use. Okay. Right. Here I can filter by ticker. This has changed as well, so that it's tickers starting with this letter rather than containing this letter. Okay. Because when people have got an awful lot of transactions, there's likely to be an awful lot of stocks and more than one stock with an A in it. Okay. And I think that's pretty much it for this transactions. Does anyone have any questions, burning questions, or issues with this? Bama.
Yes, just an issue now with this new filtering, that when I would like to filter for realty income, which the ticker is just O, now I get multiple others which just contain O.
Okay, so if I go into the DFT portfolio, it will be probably in the hybrid, and I do O. Okay, now it's yeah, Okay, so we've got O's, and
Yep.
the only thing I can suggest is sorting it, but then that's not ideal either. It really needs to have an option of this is the complete ticker. I suppose, is it fair to say that as investors, when we buy stocks, we know their tickers?
Yep.
And that if we want to filter by a ticker, we know what the ticker is that we want to filter by. Not Arbor, that was AB something. We know that it's ABR. So what I could do is change this so that it filters and it says not just starts with, but the complete filter. Yeah.
I have a suggestion. What about O space?
O space. What does O space do? Yeah.
This, by putting a space after it, you say that's it.
Yeah. Yeah, that's O space, and then yeah. That sounds like a very good idea. Does anyone see any holes with that idea?
What you said previously is perfectly true as well.
I beg your pardon?
What you said previously, that we generally know the ticker we're looking for, is true as well.
Yeah. Okay. So I will do it so that if you do, I agree using full ticker. Okay. Okay. Oh dear, we're going to have dividing here, everyone. So full ticker or space? I've had people saying full ticker, and should we just go for the full ticker thing? I think that makes sense. Full ticker. Can I do full ticker and space? Full ticker. Yeah. Okay, we'll go for full ticker. That's what majority of people seem to want. Right. Sorry, Morgan. Okay.
No problem.
Someone sent a message, and I'm going to be able to see it somewhere. How do I see the chat? Messages. Thank you, Sam. Right. Let's see, and messages. Right. Oh, I've got a couple of people who admit to guests. Right. And where are these messages? Come on. Gotcha. Okay. Dan Wooten is saying, I'm trying a screen. I was late to the meeting and might have missed something re-screening. When I click screen configuration, none of the possible screening criteria show up until I type something, and then only the criteria according to what I'm typing. Was it discussed how to show all criteria? Yeah, essentially, Dan, what has to happen is if I go into oh, I love Google Chrome. You're slowing down. Okay, so if I have a new screen, if I just press the space bar, it comes up with criteria. I have a hunch that it's not coming up with all of the criteria. It's only coming up with the ones which have a space in it. But it's which has only just occurred to me that that's what's happening. So Dan, what I'll do is I'll make a note which will say that we'll change that so that a space will show all of the criteria if possible. Okay. Green config. Space. So all. Okay. Right. Okay. Does that help, Dan? Right. And great. Yeah, it's only the ones with space. Sounds good. Right. Okay. So let's go back to portfolios. The eagle eye view. I plan to show the eagle eye view, portfolio view, and insights view. Do people want me to go to those views in order, or is there any particular view which is people have got burning desire to find out as much about sooner rather than later? No comments, no takers. So okay, so the eagle eye view. The idea of this view is to give a bird's eye view. Right. Yeah, Velma. But the trouble with O on its own will give you O and OKE and any other tickers.
No, but
Start with an O.
if you add the space after it, then it will be effectively a full ticker, and then you can use the same logic for every other ticker. If you know the full ticker, just add the space at the end if there are multiple which contain the same.
Okay. Yeah.
That's at least how I saw on this screen how this worked.
Okay. Okay.
So yeah, let me check later, but I think that this will do the trick, and you don't have to change anything.
Right. Okay. I think O space will not show anything because there's nothing that starts with O space.
No, but you just showed and used it, and it only showed realty income, which is what we wanted.
Okay, if I go back here, if I do O, we've got Oracle OKE. If I do O space, I don't have anything.
You don't have anything. Then I miss.
Yeah. So it will be, rather than starts with, it will be, this is the whole ticker.
Okay. I kind of like this option too, that you get all that contain it or all that start with it. So it's bad to lose it just to get.
Yeah. What I could do is move the filter up to the toolbar and have a little checkbox which says starts with or entire ticker. And then that way democracy reigns and people have the choice.
Good idea.
Thank you. So starts with or ticker. Okay. Right. So back to the eagle eye. I'm going to load a portfolio which has a lot less items and is a lot quicker to view for this demonstration. Okay, so here's this sample portfolio. In the eagle eye, what can I do here? I can scroll left and right using the scroll bar at the bottom. I can sort by clicking on a column. I can sort by multiple columns, okay, by holding the control key down and clicking the column header. I can group the stocks by picking a column, clicking on it, and then dragging it up to this header here, and that groups the stocks effectively by that column. So here we have all weather items, fair weather items, not categorized. Okay. I don't know if that's a useful feature, but it's something that comes with the graphical component that we're using. I can select the columns that I want to visualize. So if I'm not interested in the DFT items, sorry, I know this is probably heresy, isn't it? Saying that. So I'm not interested in those, and this is the view that I want to have. I could apply that just to this portfolio, or I could apply this column format to all of the portfolios. So whichever portfolio I go into next, it will just show these columns. If I want to, if I change my mind, I can hit the reset button and it will go back to the default view. I can show open and closed items in this portfolio. There aren't any closed items, but that's how I can see old closed positions. I can export to Excel and export to CSV, and I'm not sure the printing actually adds any great value. No, because it's browser based, and you're probably better off exporting it to Excel and then printing. Okay, I can also change the column order. So if I want to have average cost next to the last price to make it easier to compare, then I can do so. If I refresh the page, reload the page completely, it has remembered the format, it's remembered the columns I've chosen, it's remembered the column order. It would even remember the sorting. Okay. From here, I could open the company view page. I have a little button here which pops up and shows the DFT chart, our scoring graph, payout history, dividend payment history. Okay. If I click on this button, it will pop up showing the transactions, dividends I've received, any insider transactions, and any notes that I have. I can see holdings of this stock in other portfolios, whether it's in any watch lists. I can view my trading history, which is not showing anything, which is a bug. And then I can write any notes and comments on the stock that I want. And that's that for the eagle eye. Does anyone have any queries or questions?
Yeah, what I noticed yesterday, and I'm just duplicating it now, is that it seems to want to sort by ticker and is ignoring sorting by dividend yield for me. I don't see any other sort indicators.
So if I've sorted it by dividend yield, if I refresh this, and where's my dividend yield? It's still sorted by that. Now, if ever you get this sort of discrepancy, where it's not working right, hit the reset button. It's generally because there are new columns that have been added to the structure of the table, and that is impacting the way the table behaves.
And that removes any sorting as well, right?
Yeah, it will reset the table with all the columns. Okay, you'll have to reapply those columns and then apply your sorting.
Yep, that's working. Thank you.
Okay. It only happens when there is any extra columns that are added to this table, this view, which isn't that often. Any more for any more? Nope. Okay, let's move to performance. Okay. So we have in the performance view, we have a toolbar here which allows us to enter the number of years that we want to view for the performance. There are two different types of portfolio performance that have been shown. There's one which is not strictly performance, but it's showing the portfolio value. Bigger jumps are where there have been a purchase or sale of stocks. This reflects the current market values of the portfolio on those dates. In addition, on this chart, I can show the dividends that have been received. I can show the buys. I can show the sells. There aren't any. Okay. I can I scroll down here, I can see the time-weighted return for the portfolio, both without dividends and with dividends. And below we have a table for each of them showing the percentage changes by month. I can set a benchmark against which to compare the performance. So I could compare it to the SP 500 tracking ETF. I could compare it to a DFT high yield portfolio. Talk quietly amongst ourselves. Right, okay, there. I could compare it to one of my own portfolios. Okay. Yeah. Okay, so that's performance at a portfolio level. I can select here and view by sector. Okay. Again, individually for each sector, I can change the benchmark to compare it to. Okay. We've now recently added a third group, which is the company. For now, it's just showing the last close and then the price change over the most recent month, last 3 months, year to date, and last 12 months. What I would like to add here is a company by company performance chart, time weighted return. As it says here, I can double click a row and it will show me the DFT chart. Okay. Okay. Anyone, any queries, questions, suggestions about this? Going once, going twice, sold. Okay. Now I'm going to skip diversification and events. Okay. Oh, what is going on? Right. And go straight into the insights. Now, the idea of the insights view is where the application will have a look at the holdings in your portfolio and classify them amongst DFT stocks and then non-DFT stocks. Okay, so we have 3 DFT categories. Overvalued ones are basically stocks which are currently on the sell list. Okay, low growth means growth of I think it's less than 2% CAGR. DFT other is a list of stocks which are neither overvalued or low growth. We then have non-DFT low growth, non-DFT dividend payers, and then other ones which are not dividend payers. Okay. For each of these categories, I will select here in the header. It will then display those stocks, okay, in the table below. If I select one and say, okay, ABR, I want to find an alternative to ABR. It will then have a look, and this is the part on the right-hand side. It will have a look at the stocks on the buy list, and I'm not sure, I can't quite remember whether it includes watch list as well, or ones which are near the buy below price. And these are from our universe of stocks, obviously, alternatives that could be of interest. And I can filter to say I want stocks with higher growth. Okay, I won't say higher yield because there aren't that many, 13%. So these are the stocks now which are higher growth. I could say I just want all-weather ones, category ones. Okay, I can then select one of these by clicking on it. And what it does, it will update a chart here to say, well, okay, if I bought American States Water Company, using the proceeds from my holdings in ABR, then this is the growth of the dividend income projected. It also provides the ABR DFT chart and the AWR DFT chart to allow for comparison of the price and the sort of projected dividend evolution. If I select Bank of Nova Scotia and say I want ones which have higher yield and higher growth. So if I took Bristol Myers, so if I sold out of Bank of Nova Scotia and bought Bristol Myers Squibb, straight away I would get an increase in dividend receipts, as well as marginally higher growth. based on the 1-year dividend growth rate. Okay. That's the idea of this insights page. It's to provide alternative ideas from within our universe of stocks. Is that clear? Does anyone have any questions or suggestions about this? Nope. Okay. Is there anything anyone else would like to see? Whether I go back over something or one of the other views?
Robert, could you just remind us what section that is in, please?
Sorry, Tom, I didn't catch that.
Could you remind us what section this piece is in? Was it in performance?
This is dividend. This is portfolio insights.
Okay, got it. Thanks.
I think tabs like events are fairly self-explanatory. Dividend declarations received in the last 30 days. The little number which tells you the number of stocks in that category. Dividend receipts in the last 30 days. Payments in the next 30 days. Stocks going ex-div in the next 30 days. Earnings announcements in the next 30 days. Diversification, likewise. No, okay. If no one has any further questions or queries, has this been helpful? Is there
Very
anything?
helpful, very helpful. Thank you.
Okay. Glad I could help. Luann, yes, great. Gary Meadow, great. Okay.
There was a question in the chat from Luan.
There's a question in the chat from Luann.
From earlier, yeah.
Example for QTY as column heading. Is there? Sorry. Is there a way to change the text size in the screen column name? Sort of holding the control key and using the mouse scroll bar. That's the only way to increase the text size. We do have, in the reworking of the interface, we do have the possibility to target different aspects of the application to change the font size. So currently that's not accessible as a user of the website, but it's possible that we can try to open that up to say, okay, here's a configuration where you can increase the font size. To even maybe do it on a page-by-page basis. Have to have a look at that, Luann. Are there any other questions that I've missed in the chat? Nope, don't think so. Okay. Now, I have a thing I want to just check. Okay. If you don't mind, I'll hand over, if no one has any further questions, and before I hand over to Sam to talk businessy matters, I will just show, and I'm not sure who it was. Yeah, Matthew Wade, how to register. Okay. Now, from this login page, if you click on the register, this is Google automatically inserting incorrect stuff. If you type in here your Seeking Alpha username, so if I've got, and here's the one I prepared earlier, 2025 12 18 1 as a username, yeah, it detects it and registered it. Okay. Matthew, if you don't mind, could you type in the chat your user on Seeking Alpha? Because then mic's not working, right? Okay. Can you send a message for the for what your Seeking Alpha username is? Okay. Matthew, you've obviously been in the DFT forum. If you have, then there will be a when you post messages, it will be displaying your Seeking Alpha username. Aha, you are the Beelzebub, right? Okay, so if I just copy that and paste it here, okay, it's showing that we don't have that on record. Now, what's probably happened is since you signed up with Dividend Freedom Tribe, you probably changed your username, which means we don't have the correct username. So what I can do in that case is set you up with one now, and bang, okay. And so now if I do the Beelzebub, it will it would be able to register you. So it's found your username. Okay. So just register. You don't have to give first, last name. It's just friendlier to do so. An email address, it's the way that the application will send notifications to you, summaries, changes in the DFT watch lists. If you don't put in a correct email address, it doesn't stop you from using the application. It just means you won't receive anything. We do not sell or give out anyone's email addresses, full stop. So there's no danger of phishing and spam. Okay, and then a user type in the password. as well, standard stuff. And then when you log in, it will be logging in not with the Seeking Alpha username, but logging in with your email address. Okay. Right. So, anyone, any more questions, queries? Nope. Okay. So I will stop talking and I will hand over to Sam. And which means I need to work out how to stop sharing. Click on the stop sharing button. Yep, that will do it. Right. You need to turn your mic on, Sam.
What about now?
Yeah.
Okay, cool. So hi guys, thanks for tuning in. I hadn't prepared a presentation, but I thought given that there's a group of us that are together and that we're recording it, and it might be of value to you to run through just a very macro overview of where I see markets as we're heading into a new year. I know that a lot of people like to get a bit of a pulse for where things are headed as we change calendar years. So at a very top level, when you think about the DFT, what we're fundamentally doing, right, and everyone's familiar with the approach now, I'm sure, is buying high quality companies when they are at a price which we believe is an attractive entry point, both from long-term capital gains and from the direct income stream that will be derived by investing in these companies. That income stream, which is a function of the current yield and the rate at which dividends will grow. So at a fundamental level, that's how we pick stocks, right? High quality businesses, dividends go up. The reason why, and we do a decent job at picking the stocks, because when you compare against pure dividend ETFs like Schwab's product or some of BlackRock's products, the returns have been better. So that's due to the stock picking aspect. But so why do we have an opportunity to do good stock picking? And this is mainly because when you think about how institutional capital is allocated, they're looking usually at a 12 to 18 month horizon. That's when their PMs get evaluated. That's where committees decide on any changes and so on. Whereas the DFT's approach takes a slightly longer approach, right? When you think about the holding periods of some of our investments, is usually on the lower end 2 to 3 years, and on the higher end 7. Well, I mean, it's open-ended really, but it's a longer term thing. So given that we are operating outside of institutional timeframes, we have this opportunity, which creates longer sustained periods where things might be undervalued or overvalued. And this creates sort of like clear accumulation phases and distribution phases for different sectors, as these things happen in a different over different periods of time. And for example, this is what gave us the opportunity to accumulate in America's largest investment banks like the Goldman Sachs, Morgan Stanley trade back in, say, 2022, when the 12-month outlook was that M&A was contracting, but the 18 to 24 was that it would ultimately rebound. And so we attempt to buy low, then we get paid to wait the income stream, and ultimately sell high. And so that gives us a strategy which gives us a behavioral edge over others, because since we're optimizing for a quality income stream, we're not so attached to shorter term capital movements. Of course, you need to be very concerned with long-term capital movements, but in the short term, it's quite all right for a stock to go against us during a certain period of time. Now, with that being said, heading into 2026, there's going to naturally be parts of our portfolio which will do better and parts which will do not so good. And of course, we accept that the methodology is focused on buying low and selling high. So if we buy low and in the interim of it going high, performance is choppy, that's something that we accept. At a very high level, growth is in the 2 to mid 2% in the US. Rates have come down this year, but yields have only done part of the job. When we look at the 10-year, what we've clearly seen is going from an inverted rate curve where short-term rates were higher than long-term rates to a uninverted or regular rate curve with lower rates short-term, but the higher yields still persistent. And so this is very much aligned with where we would expect the beginning of a rate cut cycle to impact yields, because at first it's the forward market saying that rates are too high. Now it's back to rates about where they are, and the whole curve can be expected to move somewhat in lockstep now as every extra 25 basis point cut happens by the Fed. But what this means in the interim is that our more rate sensitive sectors, utilities, REITs, haven't seen the full repricing of a rate cut cycle yet. And, I mean, while we've had good performance in utilities in certain pockets, we haven't seen that yet fully carry over to the real estate investment trust sector. So in this sense, where we identify high quality businesses and that they provide ample cash flow to keep supporting the dividend, it is very much still an accumulation phase, an accumulation period for REITs and utilities. On the other hand, we do have a market in which valuations are getting frothy. Tech has led the way again and has been since. I'm less concerned systematically right now with a meltdown in stock prices than I am with stock prices accelerating and melting up. The reasons for this are that while valuation numbers are frothy, the earnings cycle has been extremely strong across the board. Expectations for earnings are high. And at the same time, we haven't yet fully seen yields on government debt come down and liquidity get fully reinjected into the markets, which when you bring euphoria for a new technology, a massive CapEx cycle driving it, the potential for lower rates, which now seems unavoidable as unemployment keeps ticking up. The Fed put, I am sure, is well alive in the upcoming year. We're in a situation where stocks could explode very higher. So, of course, with the DFT, what we're approaching to do is just find, okay, well, what are the pockets which are undervalued, and we'll sell into the overvalued pockets. And our tech positions now entering 2026 quite reduced compared to what they could ever have been. And tech's always been a lower exposure sector for the DFT just because of valuations in general. But we need to expect that that segment could increase materially, which leaves utilities at an interesting point in the cycle, because as long as the data center build out, and the US has very much taken the approach for data centers that they're going to create as much compute as possible in a global sort of AI race. China has taken an efficiency led model where a lot of startups are using their cheap open source models. The US is taking the spray and pray of whoever has most compute will win. This compute will need to be electrified, which creates this massive tailwind. That's a multi-year tailwind, and of course, at some point, we're going to overbuild as well when the cycle turns. But that's not the case right now. Electricity prices have been going up across the country. There's data centers that are created yet haven't yet secured electricity. One thing that's quite clear is that the demand for the services that utilities provide has changed significantly, the growth rate at which we'll be looking at over the next 10 years versus the last 10 years. So this is a structural tailwind which we can play into. And what's more, like I said earlier, the effects of yields not having fully come down yet on the longer end, and there's clear political will and fiscal incentives for them to come down sooner than later, is utility valuations haven't exploded upwards yet. And while we've started to see some moves in the like of Next Ever, which is just above now our buy below target at 80, and WEC Energy, WEC, has done very good as well. We still have Exelon and New Jersey Resources, which are on our buy list, undervalued, and arguably even in Next Ever Energy at $81 is as close to $80 buy below as you can get, and still present opportunities. So as we're going into 2026, utilities have this interesting defensive aspect tied to a long-term growth story, and have the rate sensitivity. So there we could expect things to go quite well. Financials have been taking off to move on. We've seen Morgan Stanley now move into our sell above range, Goldman Sachs, which is playing forward and increasing. And the general good results and guidance that we've been getting from America's investment banks also point towards the likelihood of a frothy market in 2026, because while they've been reporting great numbers in terms of originations, in terms of mergers, in terms of in trading profits, what we're really seeing is guidance for this to continue and for it to expand. We've only started to see real debt related deals come back on the table, and as the Fed very likely reduces rates into the next year, which will be probably a Fed which looks and acts quite differently than the one we've come to be used to, because of the seats that are up for grabs and the inclinations of the members that will be on the board of the Fed. We'll see an increased activity in mergers, originations, whether it's equity or debt, across the board, and this will continue to lead in. So we'll see likely Morgan Stanley and Goldman Sachs continue to go higher. Where I start to see an interesting time to start divesting is going to be in our regionals or in our more typical world bracket banking, which are more rate dependent, yet getting good results on the back of these past few years. So Regions Financial is approaching our sell target, and it will be looking at potentially reducing it. So that's financials. Your investment banking style expect to continue to go up. More traditional banks, maybe not so much. Internationally, I continue to see Barclays and Deutsche Bank doing really well. They turned out to be two of the best picks this year. Deutsche more than doubled, where Barclays is up. Let me check. Whereas Barclays, is up 90%, so nearly a double as well there. The opportunity to buy these, I think, has gone. They had a double tailwind with buying the ADRs, which was for the weakening of the dollar throughout the year. There's no strong evidence yet that we should see any further strengthening of the dollar as rates are expected to continue to come down. So having an international component to portfolios, even if it's through just ADR receipts, is particularly interesting right now for USD denominated portfolios. Of course, this was the case earlier on this year, but it continues to be the case. This is a trend which is structural because the ECB has pretty much finished or close to finish its rate cut cycle. Britain is close to having finished the rate cut cycle. Japan is actually talking about hiking rates, whereas the US still has quite a few cuts to go, right? From 3.5 to 2. If we say 2.5, that would be at least 4 extra 25 bip cuts, could be as much as 6 25 bip cuts ahead of us before we reach a rate at which would be sort of consistent with expectations for long-term inflation. So this creates the structure for the dollar to continue declining. Yeah, that in a nutshell is what I'm looking at. Looking at value in utilities, looking at value in REITs. Healthcare also is interestingly in that point of the cycle where it gets no love, which is usual in sort of blow off tops. The more sort of like conservative healthcare stocks tend to lag. Where there's attractive dividends to be had, and I still think the likes of Pfizer, Bristol Myers are in a loss of exclusivity cycle, which is now paying off nicely with both of their growth platforms showing the ability to expand and replace any loss of revenue in current years are at that attractive valuation range. And we've played these sort of cyclicality in the past with AbbVie, with Amgen, with Merck, with Pfizer also. We've played it, already gone through more than one cycle. And so we very much expect the same thing to happen here. So this is a good time to build up healthcare exposure in the higher quality names for which the dividends are safe and not at risk. As well, we can expect 6 to 12 months of underperformance. After a blow off top, we'll be looking at having not only secured good valuations, but be in the places where capital flows back to. So given our longer time horizons, it makes sense to start preparing in that way. And of course, any overvalued tech positions we still hold on to, like Broadcom, maybe some of you still have some IBM in your portfolios, is quite fine to let it run at this point, and we can trail it. And if we blow through 200-day moving averages in short order, maybe choose to exit at that point. But given the potential for explosive upside, I don't think it makes sense to fully exit these positions which were entered years ago. So in a nutshell, that is my views. I think we'll see markets continue to have some whipsaw volatility until we've fully taken a direction. And if we do get a market that catches a bid and moves above 7,000, if we can consolidate above that 7,000 psychological mark, I then believe that gives the runway for a return to lower volatility up markets in 26. One person had asked, do we reinvest dividends into the same stocks, drip style, versus reinvesting in those in the buy list? So I'll just finish my presentation with this, which will open also up if anyone else has questions. You can type them in or talk when I'm done. But so philosophically, we always believe in buying stocks when they are at an attractive price. There is no value that we derive in assigning a parent-child relationship in where dividends come from, right? It's not because you've got a dividend from realty income that there's any logic in saying that dividend should be reinvested in realty income. The dividend should always be reinvested in the place which is the most attractive on an opportunity basis at a stock level and a fit level at the portfolio level, keeping constraints of sector size and allocations and tilts into consideration. So that's all my presentation. If you guys have any follow-up questions or anything really related to our system, strategy, macro, individual stocks, you can drop a comment.
Sam, I want to thank you very much, and Robert for putting this presentation on. It was very good today. Thank you.
Thank you all for taking part. We're about to go into the festive period for 1 week, 2 weeks, depending. But starting next year, what I'd like to do is make myself available to help people with the application. Both using it, so for people to either book a time or to just say have once a week or once every other week a clinic where people can join a meeting, let me know beforehand, and I will then be available for that meeting time as a clinic to talk about aspects of the application. It's doing that for 2 reasons. One reason to help you guys and girls, but also for as a way of getting feedback. I use the application in a particular way, which isn't necessarily the way that other people use it, and so people see the application, think it works this way, try to work it that way, but it doesn't, or people will actually suggest through a discussion, okay, yeah, let's change it to do that, work in a different way. So I would like to do that starting in January.
Nice. And also, we got a question from Michael. Any view on small or mid cap performance in 2026 versus large cap? I still tilt in favor of large caps here. The reason being is that it's a very flow driven market, and it has been since 2008 and increasingly so since 2020. Any excess flows that we see coming in here will be in large part more institutional flows coming either indirectly from retail through ETFs or directly through larger institutions, and that sort of capacity tends to skew heavily in favor of large caps. And so while small caps and mid caps continue to appear cheaper and better valued, and in many cases they find themselves in a situation where, because of our levels of valuation being mostly a function of the current liquidity in the system. I was reading research that was done recently whereby an extra $1 in the US market leads to an increase in valuations of $2.50 to $3. Right, so that shows, you know, a crazy level of inelasticity in stocks, where adding fuel to the fire works in terms of injecting liquidity, and so we'll continue to be flow driven. This will find its way more into large caps than into mid and small caps, just because of market size, market liquidity, preference from these buyers who purchase market cap weighted products rather than equal cap or individual cap. And so I think we'll continue to see a tilt towards large caps. Second question is, what about low yield, fast dividend growth versus high yield, slow dividend growth? So these, I think, serve a very different purpose. And depending on where your portfolio is in its life cycle and where you are and your targets for this portfolio are, I'd take a different approach. Anyone who's looking at multi-decade timelines before withdrawing, I think, would be better served in a lower yield, fast dividend growth portfolio, just because these also tend to enable this higher growth. You need a higher growth of the cash flows, which if we compound over 10, 20, 30 years, means that there will be a higher level of growth on the capital gains level. However, for people who are either nearing withdrawing their dividends for expenses or already have, it's quite clear that having high current income beats the unpredictability of future growth rates. Now, when we think about our portfolio construction, even the high yield portfolio, which currently yields about 5.5%, so it's a bit below our target of 6%, and we'll try and get it back up to 6% with some transactions, has grown the dividends last year at a 5% compounding of growth rate on the portfolio level, right? At the other end of the spectrum, the low yield is about 3% dividend yield, and the dividends grew across the portfolio at a weighted 12%. So in every case, we're looking for at least a certain level of growth, even when we're crafting high yield portfolios, just because the erosion of the purchasing power of having no growth is an attractive proposition for us to have. In 2026, particularly, in the dividend space, high yield has been doing better than low yield, and usually that's in part due to repricing with rates and yields. So if I had to bet, I'd say like some of our high quality, higher yielding positions that are rate sensitive, Enbridge, tobacco stocks, any different sort of like retail high yield might look more attractive. So, but the key thing here, I think, is quality, really, because we're in a market where we saw, we've been burnt with Alexandria this year, where there's a clear reflexivity between market conditions and then management's ability to continue to sell a narrative to its board and maintain dividends or have to cut dividends. So well selected, high yield has potential for explosive returns, like we saw with BTI this year, with Philip Morris the previous year. But at the same time, I think it needs to be properly sized and adjusted for quality. So unless anyone interjects, I think we're gonna wrap this up. Maybe Robert, if you have some final words, unless someone else has a question, of course, I'm happy to take it. But otherwise,
I have one last thing that I'd like to show. Let me quickly remember how to share my screen. Oh God, where's screen sharing? Screen sharing. Got it. Right, and okay. What I wanted to show was a feature which allows everyone who uses the application to provide some sort of feedback or to even request features. If you have a look in the sidebar here, there's this feature requests option, and we have them categorized by a feature request, application errors, application questions. Okay. It's an alternative to contacting us on the forum. The forum, Rocket Chat forum, has a tendency for discussions to get lost because it's not always obvious how to have a thread. So I created this simple feature request system where you can just add a new topic, give it a description. If there's any images you want to add, do so. And we are, for example, actively working on some of the features. There's a number of features which have been implemented as a result of feature requests here. So please, by all means, feel free to use this or use the Rocket Chat forum. If you use the Rocket Chat forum and you don't get an immediate response from us, then it's quite likely that it's got lost from view. Yeah, so that's really all I would like to say quickly at the end of this.
Perfect. Well, thank you everyone for joining. I hope it was helpful. I hope that you learned something or that you had some interesting ideas. Thank you very much for turning up and listening to what we have to say, and have a wonderful day.
Thank you. Goodbye.
Bye, everyone. Happy Christmas.